Good morning and welcome to the next edition of the Brazilian American Chamber of Commerce's webinar entitled M&A Investing in Brazilian Agribusiness, Market Vehicles and Legal Outlook. Thank you all for attending.
I'd like to thank the Brazilian American Chamber and the sponsor of this event, Feijó Lopes Advogados. As John said, we want to focus on one of the bright spots of the Brazilian economy, which is agriculture. As you know, agriculture and agribusiness have a growing participation in GDP. And as John said, Brazil is one of the leaders in many agricultural products, commodities, and food products. Sebastian, talk a little bit about the three platforms that you've built in Brazil and how you've developed that business.
So we have what we call 10 platforms in three sectors. So one is in terms of inputs sectors, we have different types of plays that are companies that will go out and buy and build businesses. So as an example of that, I can highlight Biotrop. It's a leader in the ag biological space, which is bacteria or fungi used to replace crop chem or work in tandem with, absorbing more fertility from the soil, from the air, and making plants healthier. So this is one of our fastest growing stars in the portfolio. It's a fast growing industry broadly, generally, and especially in Brazil, where agriculture is extremely taxing and demanding. And I want to sell some of those biologicals to Henrique before the panel is over. We also have an input distribution business, three companies. So we're in the vet space, we're in the machinery part space, all with distribution. But our biggest play is input retailing to farmers. So we do about $1 billion worth of revenues through 7 companies that we rolled up through a structure we call AgroGalaxy. And we essentially provide everything that a farmer needs to plant, generally serving not the mega farmers like Henrique's operation, but more the medium size, which in Brazil is anywhere from 400 to 15,000 acres. Finally, in the food sector, we have a cheese-based roll-up. We're in the aquaculture space with tilapia and shrimp, vertically integrated plays. But the highlight there perhaps is Pura Vida, which is a food tech traceability, natural supplements company that operates in the better for you health and wellness space with a digital business model that's going quite well. So there's a lot of innovation too going on globally in ag and food, and we try to capture both the traditional but also the disruptive element that's going on in the space.
A relevant growth in productivity that drives farmers' margin up, which would increase their ability to pay more for the land. So that's the first component. Second component, less consolidated regions would consolidate in the future, and competition for operating this land would grow. So landowner would have a higher participation on operators' margin. That's the second component. The third component, the value would increase, the value of the land would increase as logistics bottlenecks are being resolved. Okay. I believe the thesis remain the same, but even stronger in terms of less availability of land in the future, either because of no deforestation concerns or policies, or because of climate change reasons, like people believe we will have less acreage suitable for a rain-fed production in the future. So, I want in the future, I want to increase diversification of new investments into permanent crops like coffee, citrus, timber, and into pasture conversion into cropland, also crop livestock integration. Not only for risk mitigation, revenue stability, but also for increasing annual yield component.
Excellent. Thank you very much, Henrique, for this very comprehensive response. Sebastian, we have a question from the audience, which is if you could talk a little bit about your agricultural machinery investment, which I think was a very smart thing. And then maybe you can link that to the concept of buying bolt-on investment. So I've seen in your portfolio, when you buy one type of company, you end up buying other companies such as Aquafeed and Genesis that kind of link together and can work together. So if you could talk a little bit about these two things, starting with the agricultural machinery.
You know, this is a great story because that's one of the deals that we dragged our feet the most to get done. It was kind of like the, you know, the ugly duckling that then matured into a beautiful swan. Because we kept looking at the space of machinery and, you know, for my early part of private equity investing, just kept looking at machinery. It's a very complex business. There's a lot of technology distribution, but there's a lot of cyclicality too, right? I mean, Henrique will probably be buying a lot of machines now, but then he'll watch more his cash flow whenever, you know, farmer margins thin up. And so if you're selling those machines, you get the double whammy effect there, right? That you've got fixed costs because it's an industrial business. What we liked about the machinery parts business, which was where we got ourselves into, is that it's acyclical. I mean, it's, you know, you buy machinery parts all the time. So when Henrique is expanding his frontier, he needs more machines. Whenever, you know, he can't change his machines because he doesn't have that much cash flow, he's got to replace those parts. So it's a pretty constant business through time, and that we like. Second, it's a growing business because people are getting the value of maintenance, preventive care, and so forth. And we're helping them by building those cases. Look, if you replace this part every 9 months instead of every 3 years, you're going to lose a lot less, say, you know, soybean on the ground and so forth. So it's a growing sector and it's very fragmented. So you have, you know, a couple hundred companies there vying for the space, and then the large multinationals that all have the aftermarket part. So you've got growth, fragmentation, and so forth. So we went in with this company that has a great value proposition because they're vertically not integrated, but they go all the way to import from, say, China or Turkey or India or Argentina or Mexico, whatever the part is best made. And they have a lot of credibility in the space. And then they're bringing it to Brazil and distributing. We had 2 stores when we went in 2017. And through a series of organic growth and bolt-ons, we're up to 60 stores now 3 years later. I mean, it's a pretty, and we had our board meeting this morning, and they want to open 6 more this year. It's just a really great value proposition. And I think it goes to a farmer that needs to be very well served, on time, in full, you know, large stock, always there, delivered when promised, and with transparent pricing, and just getting the basics done rightly are well. So we've done by now, you know, 3 follow-on acquisitions. The company had 15 million EBITDA when we came in 17, and through these new platforms, we'll be reaching a little bit north of 100 million this year. So it's been a very, very good run.
Henrique, the farms you acquire are operated by companies such as SLC, Raizen, Bom Futuro. What do you look for when you invite or select an operator to run one of the farms that you own?
Very good. So we have also in the portfolio like São Martinho, Tereos, Bunge, Suzano, Dreyfus, Irmão Schmidt. So we have about 30 tenants. What we look at basically compliance to our code of conduct, which sets labor and environmental guidelines for a responsible farming operation. And credit is, of course, an important issue, but it comes as a consequence of this ability to be compliant with this code of conduct.
Excellent. Thank you very much. Sebastian, I have a generic question about investors looking at Brazil. When they look at Brazil, do you think they're looking for low-cost access because of commodities or because of the local market? Or are they looking for an export platform because they can buy some of the commodities here and export to the rest of the world? Or is it both?
So financial investors are looking for returns, and you know, you can get returns, you know, in domestically focused plays and in companies or business models that are more internationally focused. So, you know, what's an internationally focused business? Say we export mangoes. What's indirectly internationally exposed businesses? We sell seeds to farmers that then sell them into the, you know, global market. Now, both work. What's happened though in the last 8 years has been a tale of effects. devaluation. And so the elephant in the room for us, as well as anyone else, is what's going to happen to your FX? And this is a question which is very difficult because, we can't predict FX, and you're going to lose your shirt trying to do that. And this is harming Brazil in the eyes of international investors, no question about it. This harms Brazil because it's exogenous, and at the end of the day, you can deliver 30% IRRs in reais, and your mom is proud. But then when you talk to your investors, that's 18, or you got to take 10 to 15% out, and that's not really good news. Now, there's also a big difficulty in getting that hedge right. I mean, anytime you try to get FX right, you're going to be wrong. And anytime you try to get a hedge right, a long-term one particularly, you're probably going to be very wrong because, hedging is such a precise thing. Unless it's perfectly done with perfectly matched instruments, and generally over a short period of time, it can be very combustible. I don't know what Henrique's feelings are there, but it's very, very difficult for us to hedge anything that's, beyond 6 months. We don't hedge.
Excellent. Well, I have many more questions, but I'm very conscious of the time. And so I want to thank Henrique and Sebastian for your time. I'm going to pass this over to Lucio, who's going to moderate the next panel.
Thank you, Thomas. Really interesting panel on M&A. Congrats, Sebastian and Henrique. Great learning. It's definitely a great privilege to be moderating this panel. Thank you very much for the chamber, John, Thomas as well. Brazil has become a major player in agribusiness worldwide. I was thinking about from a production standpoint, it became the largest producer in many commodities, including soybeans. From a fundraising standpoint, the past 3 to 5 years, some new legislation came into play that created or improved securities linked to agribusiness, such as CRA, the Agribusiness Receivables Certificate, that enabled medium to large size companies to access the capital markets and now being able to raise funds in Brazilian reais and now become available in foreign currency. FIAGRO, which is yet to be regulated, finally regulated by the Brazilian SEC, the CVM, is a hybrid fund. It includes features of FIDCs, receivables, features of equity investments like the FIPs, and features of real estate funds, like the acquisition of farmland, acquisition of real estate. So it's a very unique fund that definitely is going to be a major vehicle for Brazilian foreign investors to come and bridge the agribusiness, just like the prior panel was talking, to bridge this sector to financial capital markets.
I really think that FIAGRO will change our landscape in terms of capital markets for agriculture in Brazil. The thing is, we have, as most places, we have a lot of government presence when we talk about credit for agriculture. In Brazil is no different. We have a lot of that. But in the last 5 to 4 years, since 2016, we've seen capital markets getting closer to the agricultural market, to agribusiness. And we've seen that starting with sugarcane companies, as Cosan, Raízen, and smaller ones, because they have greater yields. And because that's something we notice a lot here in XP, we deal a lot with retail investors. The Brazilians like agribusiness. Everyone in Brazil, in one way or another, is connected to agribusiness, either because someone in your family worked with it, or because you've lived near farms or your whole life. So people like it. And when we put FIAGRO in our landscape now, what we notice is people are very anxious to see this market be professionalized. Right now, we see farms being handled and being kept by a multitude of little companies and little investors. And now we think that general partners are ready in Brazil, a lot because we have seen them form because of REITs, and now they're ready to start working with agribusiness as well.
the tax exemption is for retail investors, as Bruno said, and differently from when you look at private equity investment funds, they have tax exemption for foreign investors. They target foreign investors, and in FIAGRO you don't have this tax exemption as you have in the private equity investment funds. So I think if a foreign investor wants to come to Brazil and invest in the agribusiness, in some enterprise that is related to the agribusiness sector, he probably will still making use of a private equity investment fund. And on the other hand, I don't see a very developed sector. I think I mean I don't see the rent of farmland being a very developed sector here in Brazil, as well as you can see, for example, in corporate towers and warehouses, which is most of the investments of FIIs, real estate investment funds here in Brazil.
Mm-hmm. Mm-hmm.
So I think, and just to complement the answer given by Bruno, I think because of it, credit will be probably the first target of FIAGRO.
Okay, Igor, just so you know, staying with you, just a following question because real estate or real estate funds are quite active now in Brazil. It's more of a retail side, but we see some movements on farmland acquisition and foreigners willing to come to Brazil, and like lawyers just like you and myself, the very frequent question is, can we buy Brazilian farmland? All this changing laws that are happening. So, and we see some of these foreign investors coming and partnering with local producers, so they operate and into a joint venture. So my question to you, are you seeing this structure happening lately on foreigners coming to Brazil to acquire farmland and or to operate farmland, to explore farmland?
Yeah, this is a very good question, because as you know, we have in Brazil a kind of prohibition to foreigners to hold farmland directly, and this is a huge debate that have been happening in the past years. And when you come to investment funds, there are a lot of arguments in order to say that an investment fund is managed by a Brazilian manager, is administrated by a Brazilian administrator. So it should be allowed to have foreign investors and to hold farmland in Brazil because of that. And another kind of argument says that it can have, so a real estate investment fund and now a FIAGRO, it can have foreign investors, but they cannot be the majority of the investors in the fund. So answering you, I think there are some questions to answer before I think our law is not is not clear enough yet in order to answer that question, in order to provide to give to the foreign investors insurance that they can invest, they can structure transactions here, they can structure FIAGRO in order to have rural producers producing, being the operating a member of this structure, and the foreign investor being the holder of the farmland indirectly through an investment fund, and this will not be questioned by any Brazilian governmental authority.
Bruno, Igor, thank you very much for participating as panelists in this panel. Thank you really much, and pass on to you, John. Thank you very much.
Thank you, Lucio. Thank you, Tomas, Henrique, Sebastian, Bruno, and Igor for an excellent discussion. And thank you all for joining. Our next event will take place on the 17th of June, which is Thursday at 10 a.m. when we host a webinar on corporate governance, best practices for Brazil and the United States. Again, we thank you for coming, especially to our members. For those that are not members, please watch the brief video that follows, and we invite you to join the chamber. In the meantime, stay healthy and in good spirits.